Hello and welcome back to the Accounting Guys YouTube channel. My name is Brian. I'm really excited about today's topic. It's work in process labor. We're going to look at the accounting aspect of it as well as in service and the tips and tricks to follow in Lightspeed. So let's dive in. All right, so before we dive into Lightspeed, let's just kind of go through some definitions. So WIP labor, it stands for work in process labor. And the amount of dollars that would be inside of that account would be the amount of time that your technicians have already spent on repair orders and you have paid them for it. However, we haven't collected it from customers or we haven't delivered the product to the customer yet. And so it's the amount of payroll for our technicians sitting on open repair orders. Now, this next part can be a little bit tricky. There's a couple of different ways to monitor and see how efficient your technicians are being. And some people want to look at dollars. So they're going to look at your profit and loss statement and the margins, how much sitting in unapplied. They're going to look at expense accounts. And other people look at metrics, or they do a combination of both. And as I start off, I want to say, if you don't understand the metric piece, the dollars aren't going to make sense. And it's very difficult to even get the dollars to be accurate. It's a lot easier for us to work with the metrics and see the individual data a lot simpler than it is when we're looking inside of the financials. So first, you want to make sure we understand metrics, and then we can work into the dollars piece of it if needed. So metrics are things like the hours spent on the jobs versus their hours that they were paid in payroll, versus how many hours were allocated to the jobs, different things like that. You can get down to the exact job line or the repair order line. It's very employee specific. You have the opportunity to do metrics based off of billed or credited, and we're going to talk about those definitions in a minute. Whereas on the financials, it's not as easy. You would have to pull the information out of the GL and resort it and organize it in order to get that by employee, and you can only do it based off of the actual dollars that hit the P&L, whereas over here, there's a couple of different strategies you can take. So we'll dive in that a little bit deeper. So let's go ahead and start with some definitions with metrics. So we have different hour types. We've got billed. Those are the hours that are sold to the client. Credited. This is something that not a lot of dealers use, or they don't know that it's an option. But these are the amount of hours that are credited to the technician. So for example, you might have a C or a D level tech that is doing an A level tech work. You know you can't bill the full 4 hours for that job because you're having your D or C level tech doing A levels work, but you want to give them credit for the full 4 hours, even though you can only bill 2. That's an opportunity for you to have reports that can still show them leading and being good percentages and rankings. And it's just based off of the type of work that you're giving them and allowing them to grow within that work. Then we have actual. So actual is the time they actually spent turning the wrench or clocking into the job. They're actually working on the unit. So inside of the repair order, we'll look at that in a second, but you go in the repair order to the job and they clock in and they clock out. It's a lot easier if they are using the mobile app to make sure that that's happening regularly. The actual amount of time allows us to then see these ratios below. And then we have available. Available is typically their payroll hours. Some people will also say, well, available inside of the repair order department or doing work, because you might have other trainings or meetings and other things that you're going to go ahead and take those available hours out when you're doing these type of calculations. So there's a lot of different ways to look at this number. So now we're looking at the math: efficiency, productivity, and proficiency. So how efficient are they? So this you can do one or two ways. We can take the billed and divide that by our actual hours, or credited divided by actual to see, this work is worth how much to our clients and how long did it take us. And when you're looking at that percentage, is it 100%, everything that they're doing, we're able to bill it? Are we able to write it up? They're 115% efficient. And so they're maybe moving from a C to a B level tech because they're getting more efficient as they're working. And then we have productivity. Productivity is your actual hours divided by your available hours. So how productive are they being in their day? What percentage of their paycheck did they earn? Now that can be a little bit blunt by saying it that way. What percent of your paycheck did you earn? because there's, maybe I didn't allocate enough work to them. We didn't schedule it the right way. We have them doing different things. But the actual hours spent inside of repair orders, clocking in, clocking out, divided by typically payroll hours, their 40-hour work week. Or it could be that available. I'm taking out training time, those meetings, those extracurricular things. I'm looking at the hours that they were scheduled inside of the service department working on jobs for productivity. Proficiency. So this again has two options, whether it's billed or credited, divided by available hours. So proficiency is more the middle of the road between these two. You've got one technician that might be extremely efficient. Everything they do, we can write it up, but they only work half their day. And so it's hard because you want to pay them for the level of work they are able to perform, but you can have somebody be less efficient. You can even be negative, but they can be producing more dollars for your department because they're more productive. So proficiency is kind of a middle of the road for both of those scenarios, where it's looking at, well, what did we bill versus what was available? And so it kind of takes the actual hours out of it, and it's a little easier to look at. So there's a lot of areas we can dive into this. And if this is already too much, don't worry. This is something that can take a lot of dealers time to understand how this works. And when I say a lot of time, I typically work 6 months with the dealer before they start to really feel comfortable understanding and knowing all the definitions and being able to call out the calculations, automatically without having to go back to a paper. But the whole point of what we're doing with work in process labor, looking at their metrics or the dollars, is we're trying to find out, are they working on jobs as much as possible? And if they aren't, why not? Is it a schedule problem? Is it a amount of work problem? Is it we don't have the right type of work? Are we overstaffed? Are we sending them to too many meetings, right? There's a whole lot of reasons why. And this is supposed to just help us see some of the data behind technicians so we can start asking those questions. So you don't necessarily even need to know all of this right from the get-go. You need to ask yourself inside your service department, are we actively focusing on doing work as much as possible? We are that revenue stream, right? And what problems can we see inside of that department for the reason why they're not 100% efficient or more? And same with productivity and proficiency. So let's go ahead and move on to the next section here. So we talked about metrics, and then you've got dollars. And so just from the accounting perspective, inside of Lightspeed, you set up your labor rate, and that's what you're billing your customers at, $140, $160, $180 per hour. That's going to be your revenue. If you want to start seeing cost of goods sold inside of your service department, or wanting to do anything in the financials and the dollars, your technicians have to have a technician rate. And we're going to go over where you do that in the system as well. That's what's going to record the cost. It is a common mistake or error we see where dealers will set their technician rate as their charging rate, or what we would say the labor rate or the billing rate. And again, this all gets confusing. There's so many different words or terms you can use for this, but the amount we are going to charge our customers, our labor rate in Lightspeed, and the amount that it costs us in Lightspeed is the technician rate. So we're going to look at the other piece of the dollars as far as the rest of the journal entries here in this next screen. So with dollars, we've got the accrual. So a WIP labor account is a prepaid asset account. So when you're working in a repair order and we clock the time and we close that labor line, Lightspeed doesn't actually do anything. It tracks it in the background. It has your dollars. It's going to be doing the calculation, looking at what is the technician rate, timesing that by either the billed hours or the actual hours, depending on a preference. And so it's gathering that data so we know how much is inside of that WIP labor account. What actually puts money into that account is our payroll entry for when we pay our technicians. And so the debit being that typically, if you've got the standard chart of Lightspeed, is $2,500, and then credit to cash because we paid the technicians. Most dealers will only be working through WIP labor with their wage only. It doesn't include taxes or benefits or other things like that. We don't want to really dive into that during this video. That would be more of a one-on-one conversation. We can talk about best practices or break-even points, different things like that. This journal entry can be automated if it's being done through ADP and you're with Lightspeed. If you don't have ADP, then you're probably manually posting that, or you've built a process to post this. And the key part here, what goes into WIP labor, it's only technicians. It's not the managers. It's not other support staff. It is just the technicians, because those are the people we're trying to gauge the efficiency off of, is the individuals that are performing the work. Now we've got step 3 here. This is also automatically posted by Lightspeed. So when a customer actually pays us, we're going to cashier the repair order, and it's going to pull the money out of that WIP account and send that to cost of goods sold. So the benefit of WIP labor, and on the dollar side of it, and there's a couple of different ways to do this. If you don't want to use it as a prepaid asset, there's some other options as well. But the benefit to this is in accrual accounting, when you are recording revenue, you're also recording COGS for that at the same time. So you don't have a discrepancy. Let's say you've got 10 open repair orders and you did $20,000 worth of work, and we did that in March. We didn't actually get paid for those jobs by our customers. They didn't come in to pick up the units until April. If you weren't doing accrual accounting, you weren't doing this WIP process, in March, you're going to show a $20,000 or $10,000 expense in your service department, and you don't have revenue for those jobs. And then in April, when you get paid for them, you're going to show straight revenue with no cost. And so your cost and your revenue isn't lining up. But if you're using this WIP process, then your revenue and your cost of goods sold line up together. And so you can see an accurate margin as you're going throughout your year. Now there's a 4th entry when you're treating WIP labor as a prepaid asset account. And this is a required journal entry by your accounting staff to do every single month. And I would just say it needs to happen no matter what, probably. But if you're concerned because the entry is getting big or it's next to nothing, then that's great. But if it's getting to be more and more and more money, make sure you reach out to us, because there's probably a mapping problem, whether that's from payroll, whether that's from your tech rates, or maybe we're posting entries backwards. But this entry should be relatively small, and it should typically be in this direction, where we are going to credit the WIP labor account and post it to unapplied cost of goods sold or expense. And what is this true up, or what is unapplied labor? So as we see in journal entry 2, when we post payroll, we're sending their entire wage to this WIP asset account. But their entire paycheck, if they're 100% productive, meaning every single minute they were at my shop and I'm paying them, they were doing work for a client, then that's great. I'm not going to need to make any true up. But if I had them going to meetings or something else where they're working for me and I need to pay them that wage, I need to pull that out of my WIP balance, and that goes to unapplied. It is not applied to labor. It is either training expense, it is, for meetings, it could be inefficiencies because we can't, or different mapping problems where the tech rate wasn't in there, or it was at the wrong rate, and different things. But this is the true up that makes sure that our WIP balance, our prepaid asset value, is accurate, and that cost of goods or the expense relative to the technician is being taken in the right period. So again, this side of it is on the dollar side. It can be pretty complicated, and it's something that requires journal entries every single month. Whereas on the metric side, we're going to dive into Lightspeed and see how it's a little bit easier. So first, again, we want to master metrics, then let's jump to accounting, and we can see how that plays through in the dollars. So let's go ahead and open up Lightspeed. Okay, so in Lightspeed, we're going to go under Service, in Lists. This is where you find your labor rates. Again, this is what you're charging your customers. This is the revenue side. Down here, we have technicians. And so you'll want to make sure that you have a list of your active technicians. And in here on the right, we have, this is what I'm paying them. This is their hourly rate. And a lot of technicians are also on a salaried basis, but you want to break that down into that hourly amount, because again, the system is going to calculate it based off of their hours that they're working on jobs. So that's where we put in that rate. Let's go ahead and find a repair order really quick. Okay, so in this repair order, we're going to go to the Work tab, and here we have our different jobs, but down below where you're going to click on Labor, and this is where you can assign it to your technician, and here you can have multiple labor sessions if they're going to do some of the work and they maybe they have to come in and out of this job multiple times. So let's just look over on this side, this actual hours. This will be calculated, or you can type it in, but if you put your start date and time and the end date and time, it'll put in your actual hours. This is where we have credited hours again. They might have spent 4 hours. I want to give them credit for all 4 hours. Or maybe they spent 2 hours on it and they blew it out of the water, and I want to give them more credit for it because it's a job that should have taken 4. I'm going to give them credit for the 4 hours. Up here in this top section, this is what we're going to charge our customers. So I'm going to charge 5 hours, right? Actual hours and credited hours may impact that, but at the same time, the billed hours and what you bill the client for doesn't necessarily matter. It doesn't have to correlate to that. There's certain OEM specific hours for certain jobs and things like that, especially when you're dealing with warranties. But if we sold the customer 5 hours worth of work and he did it in 2 hours, but the job is worth 5, then we can bill that 5. And there's also another way to do flat rate labor and adjust the different rates in here, but that would be something we're getting a little bit deeper into this and would be a different video. Just wanted to show you we've got actual hours, credited hours, and these are the billed hours. So let's go look at the reports. So if we've done our job, we've gone in here, we have a start date and an end date, and we've closed out this labor line. When I come over to my reporting under service, reports, technician statistics, here you choose your date range. And so I'm going to pull just a lot of data in here. You can choose whether you want it as a summary or as a detail. And then if I want to be doing my statistics based off of billed hours or credited hours. Over on the right, we have our technicians, and here is our available time. So again, these are the payroll hours. So if I'm doing my date range, I'm going to want to figure out how many hours they worked during that period and type that in over here. So we're just going to put in some numbers. I know this is longer than a week, but just to give us some data here, we're going to generate this report. So on a summary, we can see here's our technician, Adam Larson. He did these different types of jobs. So we've got customer jobs, and looks like taxable Tennessee when we created a test job. We've got some internal work. Here's the hours we billed and credited, which is the same. We don't have any actual hours. Probably the first thing we always talk about with dealers that are looking to make their service department more efficient. And the only way to do that is we need to know how long they took. And they may be tracking that in some type of a spreadsheet, in Excel, on a board, on some type of a ticketing system. But Lightspeed can handle this for you. If they clock in and out of the job, whether they're using the mobile app or coming into Lightspeed as we saw a second ago, then we can see how much time it actually spent. As of right now, we're just going to have to trust the service writer, their gut, based off of, I think that they spent about the same amount of time. And we're making guesses. It's a lot of guesswork. So it's something where it adds a step for the technicians to have to clock in and clock out, but you can use that as a method of training them. This allows me to see if I'm underpaying you. If you're doing things extremely fast, I'm writing things up all the time, I'm going to want to keep you. I want to see that data. And so that allows them to be more bought into the process, and we've got our actual hours. So here we can see, okay, this person, Adam Seifert, he did clock in some time. He clocked a half an hour. We billed 1.25 hours for it, so he's 250% efficient. We wrote his work up. It was worth more. But down here, because of the way the math is working, it's pretty small. Our productivity, if he worked for 40 hours in this period, he's not very productive. He's only, I wrote up all of his work, but only 1.25% of his time was spent actually working on jobs. And this is where proficiency, back to earlier in the video, it's kind of in the middle of the road, because he can do the work and we can write it up so much better. I'm going to give him a little bit more credit because it was at least worth that job. And then you start having questions. Well, did he actually put it in Lightspeed? Is he always tracking his hours? And that's something that can work in. But if we can do this, this is automatically built out to see it by employee, sales type. You can split this and do this by detail, so you can see the individual jobs and if there's multiple jobs per line and what is our labor rate. So you can also figure out how much money we think we made off of this job and things like that. But it's built in and gives you a really good view of what's happening with that technician, and you can use this inside of coaching sessions. And when you're working with technicians, you start saying journal entries and debits and credits, they're going to say, I just want to go do work. Don't talk to me about unapplied and all that stuff. Just tell me, what is my percentage? This job should have taken 2 hours. You spent 4 hours on it. That is easier to understand across the board versus you've got this many dollars of unapplied or, things like that. So if your team doesn't understand the metrics piece of it, that's where we want to start. And then from there, it moves to accounting. So again, what accounting will do, it's going to take this 1.25 hours, times it by this labor rate, and that's going to post to revenue. And then it's going to take either 1.25 or 0.5, so our billed hours or our actual hours, and it's going to record that to cost of goods sold. There's other system setup under system preferences for that. I'm not going to dive into all of that because usually if you're not knowing where all those are helpful, we have to go through sales category mapping, your system preference mapping, your technician rates and your labor rates, and be sure to reach out to us. We can make sure that everything is set up the right way so that it can work maybe on both sides, where you got the metrics and the dollars as you're working through different goals and things like that. Let's go ahead and run a profit and loss for our service department. So I'm going to go under General Ledger, Reports, Profit and Loss Statement. And here we can switch to a selected department and let's go to Service. We're just going to go ahead and do year-to-date amounts here. And there is a new security feature, if you haven't seen it already in Lightspeed. You can actually grant access to the profit and loss statement for a specific department. So they don't need to see all of them, but you can give access to the service managers to see their P&L in this report. So let's go ahead and come down here. So here we've got revenue. So here's all of our labor lines. And here we have cost of goods sold. And it will split it by type, which is also really good. Now, you're going to notice we have a negative down here. This is a demo database. We don't have all real numbers in here. But typically, this number, the goal, if you're tracking WIP labor and you're doing it as an asset, the goal is that the expense account or unapplied labor, whether that's down here in an expense or unapplied labor as a cost of goods sold account, it's as close to zero as possible. There's a couple of different strategies. If you're not wanting to do WIP labor as an asset, you could have your payroll posting into an expense account, and then you can have a contra expense account, so that way it can still see how much I paid my service department, but then you can see how much got moved from the expense to cost of goods sold, and the net would be your unapplied amount and things like that. And like I said, there's a lot of options on the financial side, but it starts to get a little bit more complicated, and this doesn't break this down by employee. And so it's good to see from a department level, but it doesn't break it down by employee. We'd have to go inside of these GL accounts. So let's go ahead and do that really quick. And in here, we can get the documents, but this doesn't label anything by the employee. So it's a little bit more difficult. You'd want to build some custom reports and things like that if you're trying to reconcile the two together. But for us, the metrics make it a lot more easy to understand, and it breaks it down by employee. And then you can look at the department margins as a whole. But this gives us the same data, right? If they're not 100% productive, then their entire paycheck was not allocated to repair orders. A portion of it was done making money for us, a portion of it was not. And that's just the question you need to answer. The portion that didn't go to repair orders, was that management decision? Was that the employee? Was that workload issues? And things like that. So hopefully you can see there's a significant difference between looking through the metrics and then looking through the dollars on the financial side. All right, that brings us to the end of this video. Our favorite videos to make are the ones that are suggested by you. Be sure if you have an idea or suggestion to leave that in the comment section below. Also, if you'd like to sign up for some training or need some accounting advice or support, be sure to go below as well for our contact information. Thanks for watching.